If you're over 65, I've got some great news for you about your taxes. The IRS has made some really important changes for 2026, and in this explainer, we're going to break down exactly what these new tax breaks could mean for your wallet.
All right, let's jump right into the best part. For this upcoming tax season, the IRS has actually increased some key tax deductions. And for retirees, this is fantastic news. It means you can potentially lower your tax bill and, keep more of your hard-earned money right where it belongs with you.
So, first things first, let's talk about the absolute foundation of your tax break, the standard deduction. This is the starting point for everything, and for 2026, that amount has gone up.
Now, you might be wondering, what exactly is a standard deduction? Well, think of it this way. It's simply a specific dollar amount that the IRS says, hey, you can just subtract this from your income right off the bat. This lowers the amount of your income that can actually be taxed. And the best part? You don't have to save a million receipts or itemize anything to claim it. It's simple and it's automatic. So, what are the new numbers? For married couples who are filing their taxes together, the new standard deduction is now a full $32,200.
And if you're filing as a single individual, your new number is $16,100.
Okay, but that's just the starting line. That base amount isn't the whole story, not by a long shot. Because if you're over 65, you get what I like to call the senior advantage.
Yeah, this is the part you're really going to love. The IRS provides an additional bonus deduction, just for being 65 or older. It's basically an extra tax break that recognizes the unique financial situations that a lot of retirees face.
Now here's how this bonus works, and it's pretty neat. If you're a single filer, you get to add an extra $2,050 to your standard deduction. But for married couples, it gets even better. Each person over 65 gets a bonus of $1,650. So if both of you are over 65, you get to stack them. That's another $3,300 on top of your standard deduction. Huge!
You think that's it? Nope. Believe it or not, there is one more piece to this puzzle. For 2026, a new law has introduced another deduction specifically designed for seniors.
Okay, get ready for this number. $6,000. That's right, thanks to a new law, you might be able to deduct an additional $6,000, and this stacks right on top of everything else we've already talked about. Now there's a really important detail here, so listen closely. This powerful new deduction does have an income limit. It's really designed to help folks with low to middle incomes. It actually starts to phase out for individuals who earn over $75,000 a year. So, let's put all these puzzle pieces together, shall we? For a single senior who qualifies for everything, we take that base deduction of $16,100, we add the age bonus of $2,050, and then we pile on that new $6,000 deduction. What do you get? A massive total deduction of $24,150. Just think about what that means. You wouldn't pay a dime in federal income tax on the first $24,150 of your income.
Okay, you've got the numbers, which is great. Now let's switch gears and talk about the practical stuff. The important dates you need to circle on your calendar, and a couple of final reminders.
All right, there are really just 3 key dates you need to remember for the 2026 tax season. The starting gun goes off on Monday, January 26th. That's when the IRS officially starts accepting returns. Then you've got the big one, the main deadline we all know, April 15th. And hey, if life gets in the way and you need to file for an extension, your final deadline is October 15th.
And here's a little pro tip for you, especially if you think you're getting a refund. Filing electronically, online, is without a doubt the fastest way to get your money back. The IRS says that about 90% of people who e-file get their refund within just 21 days.
All right, before we wrap things up, I want to touch on a really important question that I know is on a lot of your minds. What does all of this mean for your Social Security benefits? And this is probably the most important thing to take away from our whole chat today. Because these standard deductions are so much higher now, many retirees with low to moderate incomes are going to find that they don't owe any federal tax on their Social Security benefits. At all. Seriously. For a lot of you, these deductions will be big enough to completely wipe out your taxable income. So hopefully this breakdown helps you feel a bit more confident as we head into tax season. The key takeaway here is that these larger deductions could have a real positive impact. So we'll just leave you with this question. With this extra breathing room, how might these changes affect your financial planning for the year ahead? Something to think about. Thanks for joining us.